Ladies and gentlemen, with tech absolutely exploding, don't take my word for it. Take a look at your favorite FANG names Tesla, Microsoft. These stocks have been going through the roof. It isn't fair, why some of these other stocks are unable to rally. However, the Fed just greenlighted that rally. I'm going to tell you all you need to know about the banks. I'm going to tell you all you need to know about why they're going to be exploding up tomorrow morning. I am Mark Melnick. This is the Newsbeat Show. By watching this show, you're going to pause, read this in its entirety, agree to it, and then hit play. Thank you so much for doing that. So, yeah, the banks are going to be exploding tomorrow. We're going to talk about how the Federal Reserve actually did it. Funny thing about the Federal Reserve is a lot of times they hire ex-Goldman employees. Hmm. It's nice to have somebody who can really help you, explode up. And coming right from federalreserve.gov, a private corporation, by the way, ironically. They basically authorized a second round of bank stress test results. I'm going to go ahead and post it on a notepad just so you could see it, copy and paste right from that website. And the Federal Reserve Board, after hours on Friday, released a second round of bank stress test results. You might be sitting there thinking, like, well, look, you're obviously too big to fail. Remember when we had to bail out all the banks with $800 billion so they wouldn't fall through? They were too big to fail. Banks are not allowed to go broke. Once the house goes broke, the entire economy will collapse. So instead, let's take all these bigwigs in their suits. Let's take all these very hardworking, diligent people. Let's take all these absolutely awfully run companies and give them the power to buy whatever they please in massive amounts of money. But not only are we going to let them buy assets that we consider risky, we are going to let them buy themselves. Because what shows a good investment better than investing in yourself? And the interesting thing about investing in yourself is you're coming from a point right now where the market is going through all-time highs. Again, don't take my word for it. The spiders hit all-time highs right over here on Thursday, 372.16, 372.46. And you could just see that the spiders were in a massive rally. Now, why does this matter? Why is this corrupt? Well, I'm going to tell you why I feel this is the epitome of legal corruption. So banks have what's called investment units, investment arms, investment departments, whatever you call it, Sally, if it makes you sleep better at night. Banks are not simply what people think they are. Banks are a lot more than going up to a teller saying, "Hi, how may I help you today?" And then you say, "I'd like to withdraw some money or make a deposit. Can you insert your credit card or your debit card and show me ID?" There's more than that to a bank these days. Banks invest in companies in their investment arms. They make very risky bets. If you remember the housing bubble and the housing crash back in the late 2000s, the banks had to be bailed out for their crappy investments. But that's okay. We're not here to judge the banks today. We already know that the banks are making good investments. How could they not? What are the odds from March when the spiders went from $218 to last week when they went to $372, representing a solid 75-80% gain off the lows? How do you think their long term investments are doing, ladies and gentlemen? pretty well. So the banks have this information. You don't because they didn't release their earnings report yet. I'm going to show you how magical this whole slew of corrupt legal nonsense hardens together. And it's just my opinion. Please do your own due diligence and kindly come up with your own opinion. Don't take my word for anything. I implore you. Instead, what do you think? How do you think the bank's investments are going? Probably better than they effing ever have done before, is the most likely answer, considering, they don't have, some of these Wall Street gurus running it, right? Ding. So the banks are doing well. So they're sitting there, they're doing well, they're making probably tons of money. And then what happens is the Fed comes out after hours yesterday and says this. The banking system has been a source of strength during the past year, and today's stress test results confirm that large banks could continue to lend to households and businesses even during a sharply adverse future turn in the economy, said Vice Chair for Supervision Randall K. You should probably hang yourself if that's your last name, but Quarles? I don't know. I'm not here to judge people's last names. But anyway, Smith? Anyway, just moving on from Charles, but anyway. So yes, the banking system has been a source of strength because they have the backing of, you ready for this? Da 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 da, the Federal Reserve Board. So instead of people borrowing from the Federal Reserve Board, the Federal Reserve Board literally creates the money. They give the final say to print the paper. And even easier, you don't even need to kill trees. You just press a button on a computer and poof, as much money as you want appears. Now, what they do, just to give you a little, and I need you to see a visual because when I tell you what's going to happen with these banks, you'd be like, oh yeah, that crazy Melnick is, yeah, he was talking about it, and this is what's going to, in my opinion, happen. So you have the Federal Reserve right over here, FR, we'll call them because they're just so fresh. You have the Federal Reserve right over here, and what the Federal Reserve does is they go ahead and they ship the money over to the banks. They ship the money over to the banks, who in turn just really just spread it to, businesses, people, whatever, during any crisis. So they print the money, they send it to all the banks, not just one, but all the banks, and then the banks are just like, here, you need money, here, you need, it's backed by the Federal Reserve. You need, you need, you need, you need, you need. They're in a zero risk situation. But allow me to continue. The board's stress tests help ensure that large banks can support the economy during economic downturns. No, you printing the effing money and giving it to them is how they can support the economy during economic downturns. But just allow me to continue. The tests evaluate the resilience of large banks by estimating their losses, revenues, and capital levels. Funny. So the Fed is directly responsible for their capital levels. And yet, no, I'm not saying that's the only source they get it, but if push comes to shove, click, there goes your capital levels. And guess what? There goes you investing all this money in stocks, loans, housings, markets, everywhere. And with the market going to all-time highs, you're doing great, which provide a cushion against losses. This is the most honest word they said. Yes, because when you're giving somebody money, it's like almost like an alimony check. And it's like, well, yeah, we're going to provide you a cushion against losses. What are you going to do? Are you going to put some padding on my chair? Like, no, we're just, you're going to look at your bank account the next day and there's going to be a number followed by several other numbers under hypothetical scenarios over future 9 quarters. So what they did was they made up what's going to happen 2 years and 3 months from now, 9 quarters, 2 years and 3 months from now, they did hypothetical scenarios like what happens if the economy crashes? Oh, we could print and give them money. What happens if this happens? Oh, we could print and give them money. This is the things they're doing. Earlier this year, the board conducted its annual stress test and additional analysis in the light of the COVID event. Those results found that banks generally had strong levels of capital. Where are they getting all this capital? It's sick. Are people just running in making deposits? But considerable economic uncertainty remain. Oh, so despite the fact that we're printing and giving literally to the point, if needed, practically, unbeknowingly, infinite amounts of money to the banks. In response, the board in capitals, like what kind of conceited son of a lovely couple would actually refer them to themselves in capital as the board? Oh, really? What if you made it the board? Oh, not as. How about, you know what? Why why not just go like this? Put it in all caps. Put several restrictions in place to ensure that banks would preserve capital, including suspending share repurchases and limiting dividends. So, um, earlier in the year, during the COVID crisis, in order for the banks to preserve capital, they were suspending their share repurchases and they were limiting the amount of dividends that they could pay out to you. We're talking by banks, places where they don't have ATM cards and don't give you withdrawals like Goldman Sachs, banks like that, BlackRock. With the restrictions in place, large banks have recently built capital. Really? How did you build capital with these restrictions in place? The Federal Reserve did that by printing trillions of dollars for COVID relief, which ended up, obviously, in the market. Despite setting $100 billion in loan loss reserve. So they loaned money and they set aside $100 billion. That's great when the stock market goes up. This stress test included two hypothetical scenarios with severe global recessions. The first scenario featured an unemployment rate that spiked to 12.5% and then declined to 7.5%, while the second scenario included a peak unemployment rate of 11%, followed by a more modest decline to 9%. Under both scenarios, large banks would have over $600 billion in total losses, considerably higher than the first stress test this year. Blah, blah, blah for media inquiries. Really? You have a media department? You're the Federal Reserve? Cool. Oh yeah, that's right. You're a private company. Cool. I see. When's the photo shoot exactly? The firms will blah, 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 will not be reset with the current capital. The modified restriction will continue to preserve capital and ensure that large banks can still lend to households and businesses. So when you're talking about preserving capital here, these banks pay dividends and these banks know that they're going to be doing well. So what they're going to actually do is, because they already have the information of how their portfolios are panning out currently, they're doing a share repurchase prior to their results. And let me show you exactly what happens next. Take JP Morgan. No love. Stock was unable to rally with the all-time highs in the market. The stock got relatively crushed down to $76.91. This is a weekly chart with all-time highs made on January 3rd this year. The week of January 3rd. I could take you to a daily chart. The all-time high was literally made January 14th at January 2nd at 141.10. And these banks have not rallied. And other banks like Goldman Sachs, these companies are nowhere near the all-time high. 275.31 on Goldman Sachs. Compared to where the spiders are, is what I mean by nowhere near all-time highs. Yes, it's been farther before, but it didn't get to all-time highs in 2019, not 2020. It made it in 2018, and it just never was able to come back. Then you have what I call real banks, places that have ATM cards, etc. like 35.72 all-time high in Bank of America. I believe that's the all-time high, right? No, not even. All-time high in Bank of America. That's right. Back in 2006, $55.08. So none of these banks have been rallying, yet they know, and this is just my opinion. Do your own due diligence. I'm giving you my 2 cents. This is for entertainment purposes. Pretend I have a little clown nose on and I could squeeze it and it goes like when I squeeze it. Just do your own due diligence, okay? Just so we're clear. With that being said, these companies already know how their portfolios are going to be run, so they're literally able to buy their stocks into their own numbers. And I will show you that. And this is just effing hilarious. So, JP Morgan, I'll copy and paste the news in a notepad. This news came out on December 18th after the market closed. And I'll talk about which banks are my favorite and the levels and everything. I'll get to it. Just let me entertain you by showing you what I feel is happening. JP Morgan announces a new $30 billion share buyback program that it has received results from the Federal Reserve for the 2020 Comprehensive Capital Analysis Round 2 stress. Do you find that funny? Do you find that funny? So the Fed came out, the Fed literally came out, said, all right, we're going to remove the restrictions. 2 minutes later, after that news hit from the Fed, JP Morgan announced a $30 billion share buyback program. What are the odds, ladies and gentlemen, being 2 minutes apart, that JP Morgan was maybe part of that discussion with the Fed regarding the lifting of these restrictions? I think 2 minutes apart between restriction lifted, we're buying $30 billion. Is that a coincidence? Maybe yes. I'm not here to judge, just saying what I see. Bank of America, that's going to be an interesting one too. But here's the thing, the companies that I think are going to really do well are the fake banks. Like all the banks will do well, in my opinion, but more of the banks that have more of the research and the investment, not research, excuse me, more of the investment arm. And taking a look here at Goldman Sachs, you have an all-time high 275.31. I think this stock is going to go to all-time highs. And that is a pretty effing bold call. You have a big trigger here tomorrow, $250.46. At this point, if we open up above there, nobody knows exactly where we will open, of course. Your next bigger trigger will be 260, 262.50, right over here, going back to 2018, 262.50, followed by 267.50. So on Goldman Sachs, again, that's the triggers that I'll be watching. $262.50, $267.50 will be your breakout in Goldman Sachs. I think the Fed just like literally paved the highway for these banks to potentially make a run to all-time highs. So unless we get some random market collapse out of left field out of nowhere, then whatever, all bets are off. Just so we're clear, like this thing will probably follow the market somewhat, but these banks will, in my opinion, lead off the spiders. So it's very important to see if the banks are able to hold whatever gap up practically inevitably happens tomorrow morning. If they're able to hold it up early, and if they're able to hold it up early, I might have to go like a month out on like $300 Goldman Sachs calls, and I know that sounds like I'm off my rocker. You're looking like $300 stock close at 242.13. $300 in a month? Are you kidding? Not effing kidding. I am not effing kidding. Now, granted, for the inevitable gap up tomorrow, which is, inevitable, these calls might be a lot more expensive, but you could trade them more on an intraday basis if you're confident in the market holding itself here. You do it more on a scalp basis. I'm a little skeptical. I still think I still think we're going to have like a huge down move between now and the next 11 days. It's December 20th, which is a phenomenally bold call, by the way. But on Goldman Sachs, if you're more of into the option thing, you do common stock, you do common stock if you do decide to play it. But $300 calls a month from now are 10 by 17 cents. 10 by 17 cents. Now, what does that mean? Literally, each option to buy 100 shares on January 15, 2021 could cost you, let's say, 15 cents, making it up between 10 and 17. It could cost you $15 a contract, meaning if you bet $1,500, you would have the option to buy 10,000 shares of Goldman Sachs by that date. And if Goldman Sachs, in my opinion, makes a shorter term move, and just my opinion, to like 260, 270, 280, those calls will explode like it's nobody's business. Now, I do not think those calls will be trading at 15 bucks. Maybe they'll be 30, 40, 50 cents. Maybe they'll double or triple with whatever inevitable gap up is coming, obviously, tomorrow with the banks with this news. But, whether I trade the banks or not, they're not my favorite things to trade. I do want to simply say that this is an, to me, I've been doing this 21 years. This to me is such an obvious way that the Fed is allowing banks to participate with potential all-time highs like a lot of these tech names have been doing. And again, do your own due diligence. I'm not saying anything with anything. Do your own homework. Just thought I would give you my opinion on the matter. How about we get to some Ask Marts? Let's take real, raw, unvetted, unread emails. Let's make the world a better place. Let's help traders. We're going to take you to live emails. And the beautiful thing about these live emails, you might be saying, what is the benefit? You're going to learn a lot from the generalizations made through problems and successes that people have. I have no idea what's going to hit me in the face right now from these emails. But by being part of them, you get to not only decompress, but you're able to find out issues that you might have or still have as a trader that you didn't even know you had. And this is the beautiful thing about what we do here. So I'm going to copy and paste emails. We'll start off. Greetings from the world's epicenter of the pandemic, Los Angeles. As I sit here, Miracle Mile area, mid-city, Mark Melnick? Like, what other M word are you going to drop on me? I wonder, do I get a special cookie for this? For having achieved living in both world epicenters of the greatest pandemics of the last 100 years? Because when AIDS broke out, I was living in the heart of San Francisco in 1981. So we are in the thick of it in the City of Angels, and I know this is the season of giving. And I experienced this below, see picture, at the local SoCal Hospital about half an hour from Disneyland. The emergency room, was full and spilling over on a Monday afternoon. Outdoor seating, gurneys backed up for hours, and waiting outdoors. Now it's worse. So my friends who usually go mountain biking or hiking, etc., got antsy last spring and started this charity to help feed our local healthcare heroes, and COVID unit nurses and doctors at our hospitals. They're starting up to feed more hospital workers with food they buy from local restaurants, kneading the business and then delivering to the hospital staff. We have been shut down here since March 17th, briefly had outdoor dining. So you help two sets of folks, the small and local restaurants, which God knows over here they're shutting down. Really, the small businesses took such a pounding. So sad. So you're helping the small local restaurants and our healthcare workers needing hot food / pizza and love and support from the community. Anyway, it's a win-win-win. And direct relief is for me so practical and so necessary. Mark, it's food. I know that's important for you. So please consider donating to this in our Whirlwind Year-End Bandito Charity Encouragement Week. Oh, sorry, you put your Merry Happy after your name, so I do see your name. Rebecca Baxter, a native Angelino. So this is the picture she shared. This is the emergency room in Florida, spilling over on a Monday. Effing awful. Absolutely awful. Let's see. She shared a link. Um, she shared a link right here with a GoFundMe link right here. And what do you think, Bandits? You wanna hit these players up? Let them know. Let them not know what hit them. Do you guys want to hit these people up? What do you think? Smack them? You want to smack them? All right, let's smack them up right now. I shared the link in the Newsbeat live room. If you're watching this video, I'll try to edit. Just give me a moment. Maybe I could edit it in live in the description. You might have to refresh the video. But if you are watching this right now, make sure you don't go anywhere because I will be donating on your behalf as well. And let's hit them up. So charity GoFundMe, I'll just list it as that, and I'll just post it. Posted it in YouTube. Okay. So yeah, let's hit these people up right now. Let me just let me see right now, number of people in the room. Okay. So if you're watching this show right now, or if you're in the room and you're not in the position to donate, I am donating a certain amount of money on your behalf, regardless. Regardless, as all right, I'm gonna hide my name. I'm not looking for. Just pull out my credit card. I'll be sharing it with you guys. Just don't go too crazy on the purchases. All right. All right. Let's put in the number. Let's hit them up, Newsbeat Bandits. And let's donate now. Donate now. All right. All right. All right. And I'll probably also hit him up again tonight as well, like later, just because I effing feel like it. Let's move on. Let's move on with our emails. Why don't we? So, okay. Thank you for your email. I will now delete it. All right. Next email. Hey, Mark. I've been having a slow and steady success for the past few months and wanted to pass along how I found my rhythm. Um, Tall Jewish white boys have no rhythm, so this is going to be really helpful for me. So I'm going to make sure that I absorb everything that I can right now. First, I just want to thank you and the Diamonds for your dedication, help, and true love over the past year. I became a member last year, November 2019, and I've probably seen your face every day. I almost feel like you have earned like the Medal of Valor for that right there. No, that's actually a compliment, my friend. Oh, confused me for a moment. Just kidding. Can't make fun of myself. Gotta. All right. All the time and energy you spend on us is truly appreciated. You have no idea. So here's how I found consistency and what I would tell myself last year as I was starting out. None of this is really new, but maybe something clicks differently with someone struggling. Slow and steady mindset. Since the best time to trade is only 1.5 hours a day, keep in mind that it takes time to get comfortable with the strategy. The goal is to develop a muscle memory of how to trade that strategy, which means repetition 50 to 100 times. So, what he's saying here, First hour and a half is, in my experience, which I shared with you guys several times, the best time to trade. So what he's saying is take a strategy, which we give you here for free if you would like, repeat it 50 to 100 times so it just becomes automatic for you. That's very important. Two, I heard this over and over again until it finally sunk in. Focus on 1 to 2 strategies only. Why? Because it's easier and faster to build that muscle memory. Beautifully said. 3, forget daily, weekly, and monthly goals. Amen. Forget any timelines. Don't compare yourself to anyone else in the room. We all have unique financial and psychological circumstances that can't be plotted on a chart. How beautiful is this email? How beautiful. Appreciate that, Quad Trader. Thank you, brother. Thank you for donating to Baxter's cause. Um, Beautiful cause, one we could all get behind. That's what family is about. Thank you, everyone who donated. Um, how beautiful is this email? Mark 1 and Mark 1 reset. I would highly recommend this strategy to focus on. Honestly, that's my bread and butter. Like a lot of us in the room, this is my number one because you have more time to prepare yourself to get into the trade and get quick results, win or lose. This is how I trade a Mark 1. He's now explaining how he trades a Mark 1. I'm already in love with this email. I have like so many hearts in my eyes right now. Choose the strongest looking Mark 1 setup, A. Choose the strongest looking Mark 1 setup. B, quickly find the trigger. C, then choose a front run level. I typically prefer 10 to 15 cents, but each stock has its own nuances, which may change that. I whisper this front run level to myself. The whisper is the key. Interesting. So, for example, if there's a trigger on Tesla at $495, when the stock is 10 to 15 cents away, like 494.85, that's when he wants to front run. So when the stock is, for example, at 494, before it gets to 494.85 or 494.90, where it goes up, he's whispering it to himself. So the stock Tesla, your trigger's 495. I'm making it up. I know it's trading higher, but he's whispering it to himself. So he's like, all right. He's like, 494.85, 494.85, 494.85. By doing that, he's creating a neurological connection and a focus on the ask of 494.85, and it's going to allow him to react slightly quicker. There's actually science behind what he is saying. Don't underestimate that. The whisper is key. I couldn't more agree. As I watch the ask and the offer surge to my front run level, I release my finger from my mouse, which has been depressed on the buy button. This is exactly how I do it myself. Market order in. I always mark it in, then mark it out. I've been frustrated by limit orders in the past that weren't filled, which carried over to other trades. Each trade is linked to the next, so this helps maintain my control and stay centered. E. Now my eyes are watching the ask, but I quickly glance at my fill. So he's like looking down at his ask here, and he quickly looks where it gets filled and he moves back. I want to see it continuing upward, assuming I bought a call. Yes, you can glance at the chart for a visual, but remember to come back to the ask. This process of where your eyes look takes repetition and it is critical in building the muscle memory of the trade. So beautifully said. As soon as I enter my position, I start counting to 10. Why? Because I used to sell too quickly, and this forces me to hold a winning trade longer if it's going in my direction. If the ask is dropping against me, I try to sell my position with the 3-second rule. That's still a work in progress because it feels so quick. Normally, I try and sell under 10. After 10 seconds, if the trade is working, I look to sell most of my position based on how the ask is climbing. 10 seconds is a nice easy benchmark to start while sharpening the level 2 skills. My neighbor in this room, David in TC, helped me see this after analyzing our trades since we share them every day. H, I personally like to use a small runner because it helps me with FOMO. If the stock keeps running and I have a small part of that run, it helps me stay centered with my next trade. Usually I dump 70 to 80% of the position, then leave a runner. Starting out, I would suggest dumping 100%, then work on leaving a runner later. Mark, this is obviously nothing new because it's what you teach us. This process is just a place to start without taking into account all the other factors like what the Qs are doing, etc. That's what I tried to do for you guys. So I tried to take it to that level. That's why I tell you guys, well, this is happening. The market's with us. The market's not with us. The market's not loving us here, like that. But hopefully these steps can help someone like they have helped me. Had my best 2 days this week, breaking into low four figures on Wednesday and Thursday. Been green every week since May, except for 3 red weeks. Thanks so much, brother. You're a superhero juggling everything you do. By the way, I attached a new strategy for when we get punched in the face from a stock like Tesla Friday morning. Like you, I got caught in multiple front run losses and thought this was helpful. Tip: this can be applied to any stock or life situation. And um, so so this is his new strategy. It's just a picture of my face. That's what I look like after I use the toilet in the morning. Okay. Thank you. That was a very beautiful email. I'm gonna go ahead and create a post. Um, I'm gonna call this Tim's way of front running Mark 1. And what I'm going to do is call it Tim's way of front running Mark 1 and trading Mark 1. Is that long enough? And then what I'm going to do now is I'm going to go inside the room drive and I'm going to share this email because I feel it's just super, super duper, 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 duper valuable. And I'm here to add value to everything you do. And this is something that added value. If you wish to read Tim's email, it's there. I'm going to even post in the alert window and spam the F out of chat. Bang! How do you like that? Let's move on to the next email. Beautifully said. Thank you very much. Room effort. Hello, Mark. A shout out to CT. Stu Stop, IQ Sufyan, who contributed towards that struggling trader in Malaysia. Always blessed to be in the room. Another reason I'm inspired to be better, consistently profitable trader. Let's aim for 99.99% of consistently profitable traders in the Newsbeat live room. Your words to his ears. Your words to his ears. Um, so here's another email from the Israeli gentleman we donated to recently. He's literally sharing his platform layout right here. I could tell, and he's trying to ask for help, but let's see what he has to say. And he obviously speaks English as a secondary language or whatever. This is the best layout I've been able to make on this platform. It uses IB. This is for demo and reading only. This is the option market level 2. He literally shows his layout. I'm not going to go through every single thing that he labeled. Pretty much 10, 11, 12 are his charts. 9 looks like the calls and puts, which he could highlight. I guess number 2 here is the options level 2. Right over here is the Tesla level 2, I believe on 3. I don't see a reason for 4. I don't see a reason to have number 4 up. But again, to each their own. And it doesn't look bad as long as you can comfortably maneuver. There is one thing I'll say though. You see right over here with your candlesticks? That's annoying as F, bro. Cause look, like can't you like pull it to the side where it's a little more to the left, for example, I mean, that would annoy the F out of me, which is why I'm bringing it up. So, for example, I'm looking at the last candle at Goldman Sachs, it's right over there. So let's say when you're looking at a candle, it's like right over there. So you're literally, you have to, in order to go from your chart all the way to your level two, you have to do the most movement with your eyes as possible, which is literally slowing you down. See the professional gamer, see the professional gamer in me talking now, ladies and gentlemen. So when you're actually moving your eyeballs over here, this is why most people suck at World of Warcraft, because what they do is they don't center their characters. Some people in World of Warcraft, what they do is there's a zoom button. They like to zoom all the way in, and when you zoom all the way into something, you have to literally move all the way left and right to see around you. But when you actually zoom out of your character and you're all the way here, you could just look around you just like that without needing to turn your head. So, nerdy World of Warcraft reference back to your um, semi-shitty layout, excuse me. You're putting the candlesticks all the way on the right side. Why not? And then you're moving your eyes back over here. So literally from here all the way to here, from here all the way to here, while the middle is useless. Why not? And I can't legally tell you what to do. Why not take 10, 11, 12 and put it where 9876 is? You want to know how I would actually do it here? Personally, I would put 10, 11, and 12 left to right on top. So, like, you see what you have here? What I would do is it would look more like this, where 10, 11, 12 are your charts. So, whatever, 10, 11, 12 are your charts. And 2 and 3 are over here. Because, you know, at least if I'm going to say your layout looks shitty, I think it's only fair that I try to offer you some sort of layout that I would use instead. And I would do it like this. Check this out. 3, 2. That's it. So I don't really care where you put anything else at this point. But this way, it's easier for your eyes to look up and down like this than like this. So this is what you're doing with your eyes right now. That's what you're doing with your eyes right now in your platform. What you would be doing here is once you have the chart and you see the layout, your eye focus would just literally end right over here, my brother. Let me show you. It would just be right over there. So you would go from what I showed you before to this. As opposed to, again, this. See the difference? Okay. Um, all right, somebody's asking me about, I'll have to answer that. Somebody's just asking me about the Newsbeat intro music. Do you guys miss the Newsbeat intro music? I miss it. All right, that's something else. Okay. Got to get back to that. All right. Hi, Mark. Hi. Starting Monday for each stock I'm following, I plan to draw two horizontal lines on the high and low of the first 1 minute bar so I can visually remind myself when it's safe to trade and when it's not. Brilliant. Absolute genius. Listen to what he said. He's going to plan two horizontal lines. You know how like a lot of shitty people at drawing trend lines teach you how to draw them, horizontal lines, which are just very ineffective on average. But he's going to not even do it as a trend line. He's just going to do it in the morning. So, for example, if he's watching Apple on the 1 minute, this is what he's going to do. So, this is Friday. So, what he's going to do is here's the first 1 minute bar of Apple. He's going to do this, and he's going to do this. And he's going to draw these two trend lines right here, this and this. And what happens is if the stock is trading above this trend line here, wherever it may be, he's willing to go long. And if it's not, he's not willing to go long. Absolutely brilliant. I think that could help a lot of people. Well said. For me, I'm hoping this cue will at least help me think twice before entering a trade, and keep me patient for only the best setups. I love your mentality. Here's the chart pattern from Amazon from Friday. I lost 3 figures on Amazon, in part because I was loose with the rules. Main reason was psychological stubbornness. See the two yellow horizontal lines on the chart. Starting Monday, I will write down 2 rules on my daily sheet. Only go long if you're above the yellow line, and then follow the Mark Melnick strategy, vice versa when going short. And prior to making a trade, confirm in caps mentally that all trades must be entered as scalps unless proven otherwise. Don't play your hunches. The market doesn't care what you think. Amen. Note that red horizontal line is the Mark Melnick level. All solid moving averages are EMA, and dotted ones are SMAs. Just FYI in case anyone is curious. God's blessing to all. Let's see what you said. Showed here. All right. So what he's doing in here is like, here's Amazon. It might be hard for you guys to see, but here's the first 1 minute bar. So he's basically saying, unless you're above this top bar here in the future, he's not going to look to go long anything. He's not going to look to go long anything. And if you're below this bar, maybe he would only look to short. This red line, I think he mentioned, was one of the moving averages here, but I mean, overall, I think what you just said was brilliant. I think that could help a lot of people stay out of trouble. Um, this is a reply email from somebody who was struggling recently. The next one. Thanks, Mark, for your answer. I try to watch as much content as you produce. I want you to know that when I commit to something, I put enormous amounts of time and dedication. So the time you put in me or others is not in vain. It is much appreciated. Friday was a good day after so much struggle. Not measured in P&L. I had a lot of small green trades as I told to myself, 1 or 2 contracts. No adds to a position. That is it. I had one instance where I entered a trade and my old self told me to add to the position because it immediately went against me and that would help me get a better price. Guess what? I did not add. I took the loss. Discipline. Discipline. I love what you just said here. And it felt like progress. I know I need to continue to do this until it is second nature, and I'll keep trading 1 or 2 contracts for a long time. In the past, as I got more confident, I was adding size, and I can see that I was not ready for that. Your answer to my email this morning was very useful. The parachute analogy was spot on. Thank you. So the parachute analogy was me basically I speak on my own behalf and whatever. Nobody cares what you think about a trade going up or down after you enter the trade. I care about people thinking a trade could go up or down when they enter the trade. As soon as you enter the trade, your opinion and it gets thrown out the window. I'm only talking about my behalf. This is what helped me get to where I am today. Because a lot of people buy something and they say, I think it's going up. And then what's going to happen? It's either going to go up, sideways, down, upside, whatever it does, right? It'll either go up or down for the most part after you buy it. And the problem is if it goes down, you're afraid that you were right and you should have held, or even better, doubled down. And that's where traders get into trouble. So I consider the parachute analogy as You're looking to skydive off a plane. Should I jump? Maybe yes, maybe no, maybe yes, maybe no. Your opinion matters a lot at that point. As soon as you jump out of the plane, your opinion gets thrown out the window. It doesn't matter. You're pulling the parachute no matter what. As you fall, you're going to pull the parachute no matter what. Your decision making is final at that point. You're not going to make a decision like you see the stock plummeting in your face and you're plummeting towards the ground. You're like, you know what? I'm not going to pull the parachute. You will. It's just a matter of when. So that's where your opinion doesn't matter anymore. Your opinion mattered before you actually decided to jump out of the plane or not. Once you take the jump, your opinion doesn't matter. Once you enter a trade, the market's going to have its way with you up or down. And the only thing you could do is pull the parachute. And that was my analogy. Glad your Friday was a lot better, bro. And you know, definitely keep you up. Um, was this a question this is a question I answered. Um, I answered this one already. And all right. All right. Okay. So, with the banks exploding up tomorrow and, whatever may come with us, I think I also just want to share real quickly with you guys, just real quick, when these banks are actually reporting because the timing of it is so sus. I mean, right now, Goldman Sachs reports on January 13th. It's actually not too far away from now. So here's Goldman Sachs. January 13th is literally right over here. I'll move my head so just so you can sort of get a visual of the stock going to January 13th here. This is where it runs into earnings. In my opinion, it has to be strong. They passed the stress test and they were well capitalized. They ran a thing saying even if a economic collapse happened at this point, they would be well capitalized. And at this point, it just seems so obvious of what needs to happen, And I'll tell you right now that it's going to be very interesting to see some of these banks tomorrow. Going to be looking forward to trading. If you ladies and gentlemen enjoyed this broadcast, there are links in the description that will show you how to be part of T3 Live's #1 trading room. I hope you guys did enjoy this Newsbeat, Ask Mark, and Bank-splosion episode. Thank you for all the charities, to all the worthy causes that you guys donate to. It's people like you that make the world a better place. I love you all. Happy trading, make money. I'll see you guys tomorrow morning on the Newsbeat